Hello everybody, this is Saint Charts. Today we're just going to run through corrective moves as part of our educational package. So just get straight into it. So what we've got here, I'm going to run through a couple of the most common corrective moves, the common correction and the double correction. There's much more complicated corrective moves, but I think, personally, I would get used to these two most common corrections before moving on to the more complicated structures. So let's get straight into the common correction. This one here is a three-wave structure as shown here, and so waves A and C are downside in a bear market, and wave B is to the upside. So as you can see here, that's our wave A to the downside. Wave B is the corrective move to correct that downward movement, and then a final wave down here in wave C, and that should finish the three-wave corrective structure. So pretty straightforward. So if we have a look at that in a bit more detail, what I'm going to show here is a zigzag. There's other structures, but I don't want to go into too much detail because I don't think that that's really necessary for initial starting point. But here we've got a zigzag structure, which are quite common. So what we're looking for here is a sort of a wave 1, 2, 3, 4, 5 to the downside, pretty much like the impulse moves. And then we're looking for an A, B, C, so a three-wave corrective structure, and then another 5, 1, 2, 3, 4, 5 to the downside. Now on each of these moves here, pretty much with the impulse moves, you're going to expect a divergence here on 5 between 3 and 5, and the same here. So that sort of gives away the structure a bit. But wave B can be any corrective structure. So that could be a 5-wave move there to the upside. It could be a double correction, but for this, to keep this simple, we'll say that's a 1, 2, 3. So that's an A, B, C. There is, that could be just an A, B, and a C. It doesn't have to be a 5-way structure, and that one there could be an A, B, and C. It doesn't have to be a 5-way structure either. But just trying to show the common things. But overall, we're still talking at a 1, a 2, and a 3-wave move to the downside, and then after that you'd expect another move to the upside. Hopefully in a bullish market, it'd smash the prior high and start the next leg higher. So that's the zigzag there, or a common A, B, C. I've shown a zigzag, but so a 3-wave structure to the downside. The next one I'm going to do here is the double correction. It's often it is labelled a WXY in Elliott Wave terms, and this is a 7-swing structure to the downside. It can be in any various forms, really. So so if I just say first, so that's a 7-wing structure. So that's a 1, 2, 3, 4, 5, 6, and a 7 to complete the Y. So that would be in the terms of here. So that's a 7-swing structure, labelled as a 1. That's one complete structure there, and then that's the second one there, completing the corrective from this downward trend, and then another one down Y. So effectively, it's sort of two ABCs joined together. So that's another way of looking at it. And as I say, this here could be a 1, 2, 3, and then a 1, 2, 3, and that could be a 5, 1, 2, 3, 4, 5 down there. So it can be made up of sort of any sort of structures, but overall that would be a 1 swing, 2, 3, 4, 5, 6, and 7. And then once that's completed, you should expect a good shift to the upside. So that is a double correction, very simple. We'll just look at a couple of examples here. So as I said earlier, it can be sort of formed of many different variants. So what I've showed here is just a couple of examples. So here, this is the 7-swing structure. You got the 1, that's your 2, 3, 4, 5, 6, and 7, and I've shown it here. So that's a 3-wave structure to the downside, then followed by a corrective move back to the upside of a 1, 2, 3, and then another 1, 2, 3 to the downside. So that would be one structure there. And then we've got another corrective move, and then the market's decided it's going to move to the downside again. So then we've got another 1, 2, 3 to the downside, another 3 to the upside, and then in the final move here, I've shown an example, is a 1, 2, 3, 4, 5. We should see divergence between the 3 and the 5, which would give us our indication that the market is going to take a reversal and hopefully to the upside, and it's time to jump on the bull's wagon. So, and there's another example there, but it's basically, as far as we're really concerned there, we're sort of talking a 7 swing structure. So that's the double, and there are other corrective moves. We've got triangles, flats, you've got WX, YX, Z, a triple, and some other ones, I think. But I think for learning purposes, I'd concentrate on those two for starting off, and then once you've got comfortable using those, go and start learning about triangles and flats and advance your knowledge from there. Okay, that's me. Thank you very much. Bye.